Hello, everybody. Welcome to WilsonsFinanceMind.com's YouTube channel. We're here to talk about moving averages, how to use them, which ones to use, and keeping it simple. Why we use moving averages. It helps us analyze price much quicker, it identifies trends, and it times entries and exits. It allows you to place a better stop loss, all of which is necessary in our trading systems. Which ones do we use? We believe the 250 and 20-day simple moving averages are your best. 200 allows you to look at longer term trading setups. The 50-day is more for the swing trader and intermediate trading setups. And the 20-day we utilize more for the term of momentum being identified. So shorter term traders can use it. It's not necessarily my best form though of using a moving average. We got an example here with Morgan Stanley, a position I entered earlier in the year. I was looking at this green line here. It's a little difficult to analyze, but I actually entered right here at the cross. It eventually came and tested that 200 day. I had my stop just below. It never triggered and has since continued upwards off of this green moving average. If you enter on a 200-day cross, more times than not, if you properly place a stop below it, you will stay in that stock unless it does have a drastic price move below the 200-day, in which you probably want to be out anyway. What we utilize, the red, which is your 50-day, and the blue, which is your 20-day, is more for stop placements and identifying whether or not it's still in an upwards trend. So right now we've got the 50-day red mark here, and as you can see, ever since it's crossed that 200-day, it has been support along the way. So right now I would probably have my stop moved up to right below this 50-day moving average, just so that I can lock in some profits if it does turn quickly. But at the same time, I don't want to have it too close or above it, because this may trigger and continue to move upwards. The blue 20-day moving average is excellent though for identifying whether or not you're still in a momentum play. As you can see, this kind of went sideways until it broke out. Well, a lot of the times you may see choppier charts. If this blue one is pointing upwards, and even if all three are pointing upwards, you may be in the beginning of a massive upward move. In my position, I entered down here in the 30s. It has since jumped up to 40. I've made a great profit, but I don't like to sell my winners unless there's reason to. Using these moving averages to adjust your stop loss up, you would not want to exit this position until it started to break these moving averages. I think in my case, having had a $10 move already, I'm going to utilize the 50-day to trail my stop loss, but a lot of people may actually utilize this 200-day to give themselves more opportunity for this to make a lower high and move upwards. If you have any questions, join us at Wilson's Finance Mind on Twitter, YouTube, Facebook. We also have a Stock Twits and Trading View account. You can look at what we're looking at and join in on the conversation. Go to wilsonsfinancemind.com and learn more along the way. Thank you.